You know that feeling when a hot new company is about to go public? The buzz is just electric. But let's be real, jumping into an IPO can feel like a total gamble. Well, what if I told you there's a secret signal? A way to see what the really big players are thinking before the market even opens. That signal is exactly what we're going to break down today. So that's the big question, isn't it? Before the floodgates open to the public, before that opening bell even rings, a very, very specific group of investors gets an exclusive sneak peek. And trust me, their decision to jump in or stay away can change the entire game. And that exclusive first look, well, it goes to a special class of investor. They aren't just early to the party, they're the ones laying the foundation. They're the bedrock for the entire public offering. So what in the world is an anchor investor? Okay, put simply, they're what's known as a qualified institutional buyer. We're talking about the big leagues here. Huge mutual funds, massive insurance companies, major global funds. They get the chance to buy a giant chunk of shares one single day before you or I can. This locks in their investment and basically sends a huge signal of confidence to the rest of the market. And, this isn't some newfangled idea. It was officially brought into the Indian market way back in 2009 by the regulator, SEBI. It got put to the test almost right away with the Adani Power IPO, and ever since, it's become an absolutely critical, standard part of the modern IPO playbook. All right, so we know who they are, but now let's get to the real heart of it. Why do they matter so much? Well, it all boils down to one incredibly powerful idea: confidence. And this analogy just nails it. Picture an IPO as this brand new ship, right? And it's launching into these choppy, totally unpredictable waters. The anchor investor, they're that massive, heavy anchor that gets dropped to the seafloor, giving the ship immediate stability and keeping it from getting tossed all over the place right from the get-go. So, how does that stability actually help? Well, their participation gives everyday investors like us a huge boost of confidence. It helps the market figure out what a fair price for the stock should even be. Their investment is basically a powerful stamp of approval on the company's valuation, and this is super important for companies that are maybe a little complex or aren't even profitable yet. And hey, this isn't just theory. The impact is real. Just look at Interglobe Aviation, the company behind Indigo. The anchor investors were lining up around the block. That created this huge wave of excitement that just supercharged its IPO. But then you have a company like Prabhat Dairy, which got a much colder reception. The anchors thought the price was too high, the market saw that as a major red flag, and the whole IPO just stumbled. Okay, so this all sounds incredibly powerful, but it's not the Wild West. To make sure this whole process is fair and actually adds value, there's a pretty strict set of rules that these anchor investors have to play by. First things first, this is a very high-stakes game. To even get a seat at the table as an anchor investor, you have to be ready to commit a minimum of 10 crore rupees. That's well over $1 million US. It makes sure that only the most serious, deep-pocketed institutions can get involved. Now take a look at how the entire IPO pie gets sliced up. Anchor investors can be given a massive piece, up to 30% of the total shares. That leaves another 20% for other big institutions, and the final 50% is for everybody else. So you can see their influence is literally built right into the structure of the deal. But honestly, this might be the most important rule of all. This is not a quick get-rich-quick scheme. To stop them from just dumping the stock on day one, anchor investors have to hold on to all of their shares for at least 30 days. After that, they can only sell half, and the rest is locked up for a full 90 days. This forces them to have real skin in the game, proving they believe in the company, not just in a quick opening day pop. All right, so let's see how all these rules and theories play out in a real-world blockbuster. We touched on it earlier, but the Interglobe Aviation IPO is just the perfect case study for the incredible power of a strong anchor book. Get this. Before the public offering was even open for business, Indigo had already raised a mind-boggling 832 crore rupees. And that entire amount, it came from its anchor investors. That instantly validated the whole offering and created a massive amount of buzz. And just look at who was cutting the checks. This is literally a hall of fame of the smartest money on the planet. You've got the Harvard University Endowment, Goldman Sachs, Fidelity, BlackRock. I mean, when names like these line up to invest, everyone else sits up and pays very close attention. This quote right here just says it all, doesn't it? The effect was immediate and it was powerful. The crazy demand and the pure prestige of these anchor investors created a snowball effect that pulled in tons of retail investors and pretty much guaranteed the IPO would be a huge success. Okay, this has been a really fascinating look at the mechanics of the market, I think. But let's bring it all home. What does all this actually mean for you, a potential investor? And here's the bottom line. This isn't some hidden behind-the-scenes secret. The details about who the anchor investors are and how much they invested, it's all public information. It is a powerful, transparent signal that you can and absolutely should use to size up an upcoming IPO. So, before you even think about putting your money into an IPO, here is your new mental checklist. First, who invested? Look for those big, respected household names. Second, how strong was the demand? Was the anchor portion filled up easily, or did the company have to struggle to find buyers? And finally, always remember that lock-in period. It shows their bet is on the company's health for the next few months, not just for a one-day gain. So, the next time you see a big IPO hitting the headlines, you'll know what to look for. You'll know to look for that secret signal. The anchor investors have already shown their cards, and the smart money has placed its bet. The only question left is, what will you do?